Hello, my friends. It's me, Tom Altieri, New Jersey Mortgage Services. I'm the owner broker here right in Toms River, New Jersey, and we're always accessible to answer any of your questions. Today's talk is about prepaids and escrows. A lot of first-time buyers and even, upgrade buyers really don't understand what they are. So I'm just going to give you a little lesson on them today. First, with prepaids. The first prepaid that you really have is what's called prepaid interest. When you rent a property and you pay your rent for June 1st, it really covers from the month of June, from June 1 to the end of the month to June 30th. Mortgages are completely different. So if you closed on a mortgage, let's say June 15th, the lender would require that you pay what's called prepaid interest for the remainder of the month, the additional 15 days. Now, what happens from that point is the lender always wants you to pay behind. So you would skip July and your first mortgage payment would be August. So that's what prepaid interest is. Then your prepaid is, when you close on a new loan, they always want a prepaid insurance policy for 1 full year. A hazard policy, a homeowner's policy, something to protect the lender in case the house burns down or somebody falls on your step. That's another prepaid item. Then there's another section to prepaids, which are called escrows. And an escrow account, simply put, is a bank book with your name on it. And if your payment was, let's just use an example, $2,000 a month, and the property taxes were $6,000 a year, well, $500 out of that $2,000 payment would go into that bank book. And if your insurance was $1,200 a year, $100 a month out of that $2,000 would go into that bank book. And that's why you have to think of an escrow account as a bank book, so that when your taxes are due quarterly, they're paid for you by the lender. And then at the end of the year, there should be enough money in there to pay for the insurance policy. Most lenders take upfront escrows in the way of anywhere from 3 to 5 months, depending on what month you close. So part of prepayment pays are establishing an escrow account, prepaying interest, and prepaying for an insurance policy ahead of time. Again, the lender takes 3 to 5 months of both of those items to have a little cushion, a little buffer, so that if taxes go up, there's sufficient funds in there to cover the taxes for next year. I hope this clarified what escrows and prepaids are for you. If you it didn't and you do have some additional questions, just give me a call, 1-800-789-9293. Now, if you're a first-time buyer, all you have to do is fill in the box next door, and I'm going to send you some good information on a home buyer's course and some other good tips on, how to get the best home for your money in today's marketplace. So thanks and have a great day. And again, I can be reached at 1-800-789-9293.